Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach FIRE as soon as possible. So in today's video, we're going to talk about a little lesser known type of stock or asset class, if you will. We're going to take a look at BDCs, or business development companies. So if you're an American income-oriented investor that loves passive income, or if you're Canadian like me and invest in US stocks in the RRSP, since there's no 15% withholding tax, it's more than likely that some of your primary positions are going to be things like covered call ETFs like QYLD, RYLD, XYLD, or JEPI or JEPQ. So those, of course, I think should be primary, but it's always good to add a little bit of secondary positions, or some more niche stuff. I feel to add a little bit more diversification, and BDCs are a great option because they're pretty much income oriented and have very interesting characteristics. So in this video, I'm going to quickly review what BDCs are. I'll show you a few examples of them, and then I'll tell you what I feel are two great all-in-one BDC options on the US market, because I feel like just like picking stocks is unnecessary because you have ETFs, well, picking individual BDC companies is also unnecessary because you have all-in-one options where you could pretty much get all the BDCs in one. So we'll take a look at that together. By the end of the video, you should know what BDCs are and know if they're a right fit for your portfolio, especially if you're American, because this kind of stuff doesn't really exist on the Canadian stock market. This is the reason why, as a Canadian, I invest in mostly US listed stuff in the RSP. So let's get to it right away. Let's check out what BDCs are all about. So what is a BDC? Well, it stands for a business development company. I'm on Investopedia, my nice little trusty Investopedia here. And what it says is that a BDC is an organization that invests in small and medium-sized companies as well as distressed companies. And a BDC will help these firms grow in their initial stages of development. So they're very similar to closed-end funds. They're public companies, right? So you could, they're traded on an exchange. And the key takeaways here, I don't want to stay on this too much, but it's a type of closed-end fund which are typically income-oriented, publicly traded. BDCs offer investors high dividend yields and some capital appreciation potential. Just that right away gets my buds tingling, right? Because obviously we are income-oriented investors here. BDCs' use of leverage and smaller distressed company targeting makes them relatively high risk investments. I don't really know about that if it's high risk, but in my opinion, risk is one of the most misunderstood terms in investing. It should be more about your time horizon, in my opinion. But what I really want to show you, and the key thing that I want to show you here for BDCs, is this fast fact right here. Business development companies avoid corporate income taxes by distributing at least 90% of their income to shareholders. So very similar to REITs, guys. Very, very similar. They have that same structure. And this is why it's very desirable for us income-oriented investors, because they have to give 90% of the income out to shareholders in dividends. So on the Canadian stock market, pretty much not much of these exist, but there's quite a few of them on the US stock market. Let's check out a few examples. We'll look at the two biggest BDCs really quick here. Aris Capital Corporation. So these companies basically partner up with smaller to medium-sized businesses that are growing. It lends them money. It takes a share out of their business usually, and it helps them grow. So Aris is absolutely huge. I think it's the biggest one pretty much by market cap. And if we just click on portfolio to see, how many companies do these BDCs invest in or partly own, you could say, well, right away you see here balanced portfolio, well diversified. And what I really like about this is that, do they have the number of companies around here? I think right here, yeah, 452 companies. I mean, so it's just because you're investing in one BDC, remember that a BDC could invest in many companies, and you could see all the nice diversification here by region. Of course, it's mostly in the US, but there's a lot of sector diversification. So, yes, BDC is one BDC, but keep in mind they can invest in many companies across multiple sectors. I just want to make sure that's very, very clear. And the second biggest one, I believe, is FSKKR Capital Corp. So same type of deal. If you click on portfolio, you will see the type of companies or how many companies they invest in. So once again, it's almost 200 here. It's very, very big. Not as big as Eris, but you're getting the idea, right? So it's mostly what they have, or most of the assets they have, or what they do is they basically lend money, guys. That's what they do. And you could see here again a nice, super nice mix, diversification. So really unique and awesome asset class, if you ask me, that's really prevalent on the US market. On the Canadian market, I don't even know if this type of company exists, or if you could be a specific BDC company. I know that it reminds me a lot of what Alaris Equity Partners does. So if you've been with me for a long time, you know this is a company that I used to own. But throughout the years, I've been just got rid of all my single companies. So this company pretty much seems to be like a BDC to me. It invests in small to medium-sized companies and it helps them grow. So this is another reason, guys, why I like to invest on the US stock market in my RRSP, because there's a lot of cool stuff on the US side. On the Canadian side, we don't have. So that's what BDCs are in a nutshell. That's what they are. So instead of picking and choosing individual BDCs like Eris and FSKKR, are there ETFs that have all of them, or have an index that have all the BDCs? And the answer is yes. So I will give you two options in this video, guys. So the first one is going to be your basic ETF, or an all-in-one ETF. Stock symbol is BIZD, BIZD, from Van Eck here. So this ETF is kind of like an all-in-one BDC solution. So instead of picking and choosing your BDCs, you get this ETF and you pretty much have all of them in there. It follows an index called the MVIS US Business Development Companies Index. So, it tracks the performance of publicly traded business development companies. So let's look at it real quick. First of all, the first thing you'll notice right away is the really high yield. So business development companies typically have very high yields in near the 10% range, which is always great for us income investors. You see that you actually have 25 BDCs total in this ETF. Distribution frequency is quarterly, it's not monthly, unfortunately. You do see the gross expense ratio at a crazy 11%. Why is that? Well, I think it's by law that because it's an ETF that holds multiple funds, they have to include, I guess, all the expenses or the fees of all the funds put together. But the actual management fee of this ETF is only 0.4%. Okay, guys, so keep that in mind. And if you want to do further research, you could go to expenses explained, but it's really not 11%. The management fee is 0.4%, so well under 1% here. And if we go to the holding, so total return, nothing too special, but of course, if you look at any total returns of anything right now that hasn't been out for 20, 30, 50 years, they're going to be pretty low. So take this with a grain of salt here. But if we go to holdings, you will notice that it's a index ETF, which means that like the S&P 500, like the NASDAQ 100, which means the bigger the company is, or the bigger the BDC is, the bigger percentage it will be. And what do you know? Here are the two top positions, Eris and KKR Capital. So these are the two biggest BDCs that we just took a look at real quick. And of course, those are not the only ones. You have other ones like Owl Rock Capital, that's the ORCC, that's the third biggest one. And then you have a bunch of other smaller ones like a Blackstone Secured Lending Fund, Goldman Sachs BDC, a BlackRock one. So you pretty much have all the BDCs out there all in one ETF. So this is much safer, guys, than just picking and choosing individual BDCs, just like an ETF is safer than picking and choosing individual stocks. So if there's an ETF all-in-one option, you guys know that would be my preference. So BIZD is your basic option, but I'm also going to give you another option, and this is what I personally invested in. I have now $12,000 of my own money invested in BDCX. So BDCX actually follows the exact same index as the ETF. So this is an all-in-one, it's an ETN, however, it's not an ETF. So an ETN is actually very, very, very similar to an ETF, except it's kind of like unsecured debt instead of an ETF. So I'm not going to go through the exact specification or differences between ETNs and ETFs. If you want, just Google ETF versus ETN and you'll see that there, but it's very, very similar, works the same way. What's special about this one is that on top of the index, it uses 50% leverage. That's right, 50% leverage, and that's why the yield on this guy here is about 17, 18%. It makes sense, right? It's going to be 50% higher than what this one would be. So really, really nice high yield, everyone. If you click on index, management fee 0.95%, a little bit higher than BIZD, but that's probably because of the leverage. So if you click on index to see what, if you invest in BDCX, what are you actually investing in? The same BDCs, basically. You see Eris is the biggest position, KKR Capital is the second business, and here once again is the Owl Rock, Blackstone. So it's going to be the same companies, the same type of breakdown as BIZD, except this one has a lot more yield because it has 50% leverage. So which one should you get if you're contemplating? Well, if you're a buy and hold long-term investor like I am with no plans of selling and just collecting the income, my opinion, you might as well go with the leverage, right? You'll just get 50% more yield. Of course, it's going to have 50% more volatility, but volatility doesn't really mean much to a buy and hold long-term investor, right? So you got to make the decision for yourself. If you're not comfortable with the 50% leverage, you could always take BIZD. And again, I just want to reiterate that this should be, it is kind of niche. It's BDCs, so it should be a secondary position. It shouldn't be a primary position. So I want to make sure you understand that. But this is an all-in-one. So in my opinion, it's much safer than just picking and choosing individual BDCs. And if we look at the coupons, so instead of distributions, ETNs call them coupons, and they just released their new one at $1.20 here. So they're fairly consistent. This has been around only starting in 2020, so it's relatively new, but the index is definitely not new. They follow the same index, right? The MVIS, what's it called? The MVIS US Business Development Companies Index. So pretty solid distributions here. They're pretty much always about $1.20. If you go back through the years 2021, you see $1, $1.13, $1.21, $1.24, $1.25. So fairly consistent quarterly distributions. Unfortunately, they are quarterly, not monthly. That's the only thing that kind of, I wouldn't say sucks, but obviously we would prefer monthly. And just very quickly, there is actually, so this one is from UBS eTrax. They even have a non-leveraged version. So BDCZ is the exact same thing without the 50% leverage, whereas BDCX is the same thing with 50% leverage. You see that big yield difference. But if you don't want the leveraged one, I wouldn't probably go with BDCZ. I would go with the ETF instead. But if you want the 50% leverage and that high 17% yield, you're going to have to go with BDCX, which is an ETN. Again, do your research, but in my opinion, fairly safe, very, very similar to ETFs. They do have an expiry date, however, maturity date. And this is actually in a long time. It's like in 30 years or in 2050. So there you have it, guys. BDCs, a pretty cool and interesting type of stock that's pretty much prevalent on the US stock market. This is once again why I love the US stock market. They have all kinds of cool stuff. Very, very income oriented, right? Because they have to, just like REITs, give out 90% of their income to shareholders. So I took a small position of $12,000 in BDCX in my RSP. If you want to do it, always make it a secondary position. That would be my advice. And if you're not comfortable with the leverage or volatility, you could always go with BIZD. And just a reminder, if you like this video, I made a similar video called, same title, Love QYLD and JEPI, add CEFs to your high income portfolio. So BDCs and closed-end funds as well. Closed-end funds are another really cool asset class that are income oriented, and there's a lot of them on the US market. And this video shows 3 all-in-one closed-end fund solutions. Just like this video, I gave you 2 all-in-one BDC solutions. So there you have it, guys. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.